Hi and welcome back to Cheeky Crypto. Today, guys, we're going to be jumping down into the world of Bitcoin, but we're going to be taking a look at it from a slightly different lens. We're going to be taking a bit of a pivot. We're going to be taking a look at Bitcoin on macro levels. We're going to be taking a look at a few of the things that are going on in the space and all that wonderful stuff. So as I get into today's video, if you find it useful and informative, smash that like button. I do appreciate that. If you are watching on YouTube and you're not yet subscribed, what are you waiting for? Check it out, subscribe, tap the bell, select all the notifications, and in doing so, you won't miss another video update. And if you're watching on Twitter, make sure you are giving us a follow and you retweet this video to push it out to more like-minded individuals. Let's go ahead and jump down into the desktop and start reviewing a little bit on Bitcoin here. Now, this video, it is a bit of a pre-record. I'm actually away with various different meetings and things going on. So I've put together this video a little bit ahead of time, but this shouldn't matter because I'm not really talking about the current price so much as we are talking about, Bitcoin on a larger macro scale. Now, at the point of recording this video, Bitcoin's price is 29,404. I think we're going to see some volatility between now and when this video actually goes out. But, for the most part, I'm not expecting major moves. You know the kind of daily videos that I've been putting out recently. My expectations are we see a little bit of volatility. We still have the CME gap up there at $34,000-$35,000, and we also have a CME gap down at the $20,000 to $21,000. Ultimately, a small break to the downside before we have a launch upwards isn't to be, kind of sniffed at. It's not something that's unusual, and I wouldn't mind it either. But from this market cap view here, we can obviously acknowledge that market cap is up there at $572 billion. Trading volume is actually really interesting to me because we're not ranked one, or we're not rank one for Bitcoin trading volume. We're ranked 2. So we can see here there's a disparity between what the market cap is and what the actual trading volume profiles are like. We can see that we're ranked twice if the amount of money that is actually being traded on Bitcoin versus the actual market cap. Now, market cap we know is not a good measure of success, value, and things like that. Ultimately, market cap is just price multiplied by supply, and it doesn't show you the amount of money that's gone in. It doesn't show you the amount of liquidity. It's actually just a bit of a trick. It just kind of allows you to rank things in this idea, this theoretical rank that maybe this project's valuable, and it works when you have stock markets. It doesn't really work so much when you have more of an item like Bitcoin or gold or some other precious metals. Market caps are not that kind of indicative of value so much, specifically in, low market cap industries like crypto as well, where the volatility is quite extreme. Ultimately, it's just a way to, in my opinion, to trick retail investors, right? Better to focus in on things that matter, such as supply and demand. Now, at the moment, at the point of recording this video, there's 19,458,181 BTC in circulating supply out of the maximum 21 million, right? And so we know that there's actually a pretty significant amount of the 21 million now out in circulating supply. The Bitcoin halving event that is, being spoken about quite widely as kind of, what's going to create that next big bullish movement to the upside. We have to consider actually is quite less impactful now. It used to be really impactful in the early days when you were halving a pretty significant amount of Bitcoin from an issuance point of view, as in people are mining Bitcoin, new Bitcoin is being issued. And essentially, that halving event now is halving pretty low amounts of new issuance of Bitcoin anyway. The yearly inflation rate is just over 1%. I think it's like 1.7% inflation rate yearly, right? And so all we're really doing is halving that again. It's more important to think about actually the amount of circulating supply of Bitcoin, the shrinkage of that supply of Bitcoin, and what's potentially going to bring in additional demand to push us up higher. And so really that's kind of where the next part of this video comes in, right? We can see that the market has been kind of trading sideways for quite some time. It's not, anything unusual or anything like that. If we bring this up to the last year, we've seen we have moved up a little bit, but it's an overlapping structure, all those kind of things. Let's go ahead and bring in what we kind of call here fundamental analysis, but it's not so much that. I mean, we obviously know what Bitcoin is. We know that it's some kind of new kind of money, as they say on the website here, an innovative payment network. Ultimately, it's kind of being used as multiple different things: stores of value, speculative investments, money if you do really want to spend it. And of course, it was designed for the people, by the people, for the people. It is not for Wall Street. And really that brings us to the ETF section, right? Because there's ETFs popping up all over the place. We obviously saw the first spot Bitcoin ETF in Amsterdam, so the Europe's first spot ETF on Bitcoin. And this is small, but it's a step in that direction. We can see that the SEC delays set deadlines for Bitcoin ETF approval to early 2024. So we're not expecting anything from those guys anytime soon, in my opinion. There will be massive moves to the downside before we see a big breaks to the upside overall. And I still suspect Bitcoin's got to revisit that $20,000 CME gap that we spoke about earlier, right? So from a fundamental point of view, I think there's a lot of reasons why Bitcoin has performed as well as it has done over the years, right? We saw that there was a need for a currency that has no centralized controller. We know this from the 2008 financial crisis. We haven't really done much better since then, though. A lot of speculative investment. And if we really focus in on, who holds so much Bitcoin, it tends to be institutional investors, the very people that it wasn't created for in the first place. And yet we can see that there's people like MicroStrategy out there as well, also telling us that, we shouldn't fear institutional investors. And well, actually, we probably should, because as retail investors, we don't tend to fare too well against the big institutional players either, and they don't tend to like to lose. So they're not going to just invest money in Bitcoin knowing that they're going to lose money as retail investors sell on them. 9 times out of 10, most institutional investors do incredibly well out of their Bitcoin holdings, coming in out of the market and pretty much dictating the market movements, which brings me on to the price action elements of today's video. So we're going to kick off by taking a look at the weekly time frame here with this one. This is basically Bitcoin USDT on the 1 week time frame. Binance is our data source. As you can kind of see here, we're just going to focus in on our current price action, right? We can see that we had a previous area of demand that has turned into an area of supply. We still find ourselves consolidating in this range. This is actually a good sign, not a bad sign. We can see here that the consolidation within this range is better than just a rejection from this range. It means that actually we're chewing through a lot of those sell orders. There's an appetite within there to a degree. And more often than not, we'll find a good support here and we'll break on through it. Okay, so this is actually a good sign. But what if we ended up breaking down? Where do we think things are likely to go? And well, when we take a look at the weekly chart zoomed out, we can see several key areas for us, right? We know that the area of interest previously was the 17,600 to 18,814. This is an area of consolidation that we turned into support briefly in June of 2022. We lost this and we went down to the 15,476 in November of 2022. Okay, and then we've rallied up since, right? Underneath this particular area, we do have my main focus point. This is basically 11,603 to 13,948. This particular area is an area of resistance that we broke through but have yet to come back down and retest. So this is an area of interest to me, because normally what tends to happen here is when you break through resistance, you go up a little ways, you come back down and you turn it into an area of support. That hasn't happened yet, and something that maybe might happen in the future. So we need to kind of keep a close eye on it to see whether or not we actually start to see this change up any. But ultimately, outside of that, there's another level of interest, a singular area, $9,698. This particular area is a previous high that was broken, turned into support, was then broken again, turned into resistance, broken and turned into support. This is a key area for us. It's been both support and resistance multiple times over. So it's an interesting point. And then we have the real bearish area right down at the bottom here. This is essentially 6,590 to 7,681. Now, this particular area was resistance that we broke, we turned into support, then we broke it again, down, and then we broke back up, right? A quick drop in March of 2020. We never came back and retested that as support either. So there's a few interesting points. Now, from an Elliott wave theory point of view, I'll do it on this chart here. If we take a look at our W, X, Y, X, and Z pattern here, And we assume that we probably will bounce up towards kind of 37,000, because I do think that's really the upper limit. 37 to 38 is probably the upper limit. If we do bounce up here, where is our 1-to-1 to our 1.236 heading? Well, it would put us right down here, right in between that key area that we just spoke about on the low side. Now, this is an incredibly bearish thing to be thinking, but it's possible that everything that we see at the moment is just a B wave movement, because of its overlapping nature and the way that it hasn't got a trend, could just be an overlapping corrective pattern waiting for this next move to the downside. It would be one hell of a crash. It would be something that would take so many by surprise. Do I think this is highly probable? I think it's a possibility. I think the odds are actually, they're up there. It's not like it's a 1% chance. I think there's a probability that this particular pattern has maybe 1 in 5, maybe 2 in 5 of a chance to come on down here, right? So 20 to 40%. I reckon there's a good probability that something like this does play out. And there's many fundamental reasons why we might see this, right? Outside of the technicals here on the price chart, we do have to consider the various things that are happening in the real world. We take a look quite often at the wallet counts, who's holding Bitcoin, who's not holding Bitcoin, who's offloading Bitcoin, who's loading up on Bitcoin, right? And we know that large institutional players are not coming in, they're coming out. And retail's coming in. Now, retail do not have the ability, in my mind, to be holding Bitcoin for a long term without some kind of significant downside occurring. They just don't lack the power behind their price action. Essentially, it could cause a bit of a cascading effect later down the line. Now, I'm not saying that this is going to happen, because I think there's a higher probability that it doesn't happen, but it's something that we need to be aware of, right? Essentially, we have some key areas in here. On this journey to the downside. Any of those could be good support zones for us, okay? So I'm not saying that we have to go down lower like that, but it's something that we need to be mindful of, because technically speaking, from the price action, you could argue that is something that can happen. And so for the most part, we need to be aware of it, right? Now, as we kind of scale this out, we do have another weekly chart where you can see that our curved lines here, right? We curve these lines from all the low points and all the high points. And actually this one tells us 12,000 to 11,000, right? And so it looks like all we're doing here is having a mid pit stop bear market rally before we come down into those lows again, right? So another interesting point of view is that actually all we've done here is stop halfway through and we've got to move back down. Now, obviously, as time progresses here, there's a higher probability that that doesn't happen. But for the most part, it's an interesting view as well to be looking at these peaks and these troughs as to whether or not we are going to be looking at coming down and testing this low, right? We can see that this was aggressively tested in the early days. Doesn't have to come down here, okay? And we'll note that it's possible that Bitcoin's bottom is already in. However, it's probably something else that we need to be aware of, right? Ultimately, if we were to just connect all those together, it's actually not giving us the bear market low at the moment. So it's something to keep a close eye on. As we kind of scale this out, we then obviously have the Wall Street cheat sheet. And from here, we can actually try to plot out, where we sit within these things. And for the most part, I find this one quite interesting. I personally don't think we are following this. And if we were, this is the only way that I can draw it out that actually it would make sense. Now, for the most part, we would look at this as complacency coming on down. We have anxiety. We then have denial. Then we have panic as we went into the lows of June 2022. Then capitulation during that time. Bear market was done. If you remember all the influencers on Twitter and on YouTube at this time, the bear market's finished. We're in a bull market now, all the way through from June to August. And I was saying, nah, that doesn't make any sense whatsoever. I expect further downside. And then, of course, you get the anger. Okay, the anger came in. But outside of that, where have we been, right? Anger, we know and acknowledge, is lower than capitulation, which means it's not this area over here because this is not lower than capitulation, meaning that anger has to be down here. That puts us, well, in this little relief rally before depression, and depression comes down deeper. So if we are to be following the Wall Street cheat sheet, then yeah, that puts us basically with the idea that actually we've got further to the downside to be had. If we kind of progress this out again, we can take a look at where we currently sit, right? We have the Bitcoin halving, April of 2024 approximately. And the previous halving over here happened way after the bull market has started. It's not the catalyst of a bull run. You can see this in here. So let's go ahead and draw this in. Okay, so bear market finishes over here in December of 2018, and the Bitcoin halving happens over here in May of 2020, and we can see that it is 511 days after the bear market had finished. Okay, so understand that actually the Bitcoin halving was not a catalyst for a bull market. Instead, we actually saw the COVID crash and a relief rally before the halving, which is quite interesting, quite telling. But you might be thinking, well, that's just an anomaly. That was 2020. It's crazy times. So let's go back and take a look at the 2016. Okay, in 2016, the Bitcoin halving event happened. Let's go get this on over here. 539 days after the Bitcoin had bottom happened over in January of 2015. So again, we take a look at this thing and we think, okay, well, what did the Bitcoin halving do here? Well, it didn't really do much because we're already in a bull run. Okay, in fact, on this halving event, back in 2016, we actually saw a move to the downside, okay, before we rallied on up. And we saw this drop 39%. Okay, so we saw a 39% drop after the Bitcoin halving event, not before, not during or anything like that. Ultimately, 539 days. Okay, and after the bull run had started, we had a Bitcoin halving. After the Bitcoin 511 days after the end of the bear market, we saw a Bitcoin halving. So where we are right now, how many days back from the next Bitcoin halving do you think the bear market low would have been, right? It would have put us right in there actually on the November lows. So it does line up quite nicely, but it doesn't mean that the Bitcoin halving event is going to be the catalyst of a bull run. It would say that actually we're already in the bull run, right? And so we'd have to look at these things. There's information there. We do with this as you see and see fit. I personally think $20,000 Bitcoin is an inevitability and that we will enjoy a $20,000 Bitcoin before we continue a run upwards. And I potentially do think that actually the bear market lows are in, but that's up for debate until we see some more concrete trend-based structures to the upside. And so for the most part, we see some diminishing gains over time, right? 51,000 gains in 2013, 12,000% gains in 2017, 2,000% gains in 2021. So that brings us over to the price target range of today's video. How high do we think this thing is likely to go? And well, I said this before and I'll say it again. I think that actually this is going to be a good indication as to kind of where we think these are going. And I'm not expecting us to see 200,000, $1 million Bitcoin. Instead, I think we're going to see diminishing gains here of approximately 600 or so percent total. If we have bottomed, of course, if we have bottomed here, then I'm expecting us to kind of rally up to around $110,000. And then after that, back down into another bear market. 600% gains, pretty juicy, but not what you're kind of expecting. I'm not expecting, maybe we might be able to push for 1,000, possibly, maybe 1,500, but I think we'll be less than we were previously, which was 2,000, as we have a rate of diminishing gains over time. $100,000 Bitcoin, yes, but you're not going to become a millionaire by investing $1,000 into Bitcoin. I think, guys, though, this is going to wrap up today's video. If you found it useful and informative, smash that like button. I do appreciate that. If you are new to the channel, why not go ahead and subscribe, tap the bell, select all the notifications, and in doing so, you will be kept up to date with everything that we do here at Cheeky Crypto. If you haven't yet joined us in Discord, what are you waiting for? Check it out, linked in the description down below. It's a fantastic community talking crypto 24/7. It's completely free, and I don't think you'll be disappointed by what you find down there. So why not go ahead and check it out? Until the next one, though, guys, have a fantastic day.